Hello everyone, this is Johnny again, and I'm recording this video to show you yet another strategy that you can use for trading. And I call this strategy the inversion fair value gap strategy. Okay, so let's dive right into it. Okay, so the very first thing that you would need to understand about this inversion fair value gap strategy is that we would need four things in our checklist. Okay, and ideally, before we get started, I'd like to let you know that I prefer trading the inversion fair value gap using assets such as stock indices like Germany 40, S&P 500, the Dow Jones US 30, or the NASDAQ or NS 100. Okay, they all have a naturally long bias. So that means that in time, they always push higher. Okay. And my general bias for these assets would always be to take long trades. Of course, I still take short trades, but with caution, but I prefer taking long trades. Okay. So first requirement would be, given this piece of price action right here in Germany, uh, 40 or Germany 30. First is you need to have visible targets, at least three swings on the left side. Okay. So it means that market should have pushed lower, okay, or trended lower for some time. And you are actually waiting for a reversal play. Okay. So you'll see we got a couple of swing highs, okay, lower swing highs as it pushes lower. This is what we're looking for because these swing highs are actually potential targets. Okay, second, you need to be able to see a price sweeping a previous swing low. If you're taking a short, then it should sweep a previous swing high. Okay, like what I said, my bias is always long. So I prefer looking at price making a sweep of the swing lows. Okay, so these are swing low sweeps, sweep of swing low. This is another sweep of the swing low right here. So this is a sweep right there. Okay, and here is another sweep right here. Okay, so these are sweeps, meaning price took some liquidity from below, probably took out some stop losses, okay, before reversing. Okay, so third one, we need a single fair value gap or a single H4 fair value gap. By the way, I like trading this on 4-hour time frame. You may trade this on daily, you may trade this on 1 hour, but I think 4 hours is a good balance for me. Okay, so single 4-hour fair value gap as it pushes lower and taking out liquidity. In this case, we see 1, 2, and 3. So 3 H4 fair value gap. So that's automatically not acceptable for me. Okay, in this case, there's another sweep right here. And this sweep has actually been brought to this level using 1 fair value gap right here. Okay. Now, the next thing that I'd like you to do is, of course, to uh, to look at whether price would invert or break above the premium of this fair value gap upper border. Okay, so in this case, this candle right here broke above the premium and closed above the premium. Breaking is not enough. Closing above is what we require. Okay, again, we have visible targets on the left. Price swept the swing low. There is a single 4-hour fair value gap and price inverted or broke and closed above the premium of that fair value gap. Okay, so once this closes, you can now put a long entry. Stops, you have two options. An aggressive stop would be just right below, okay, the swing right next to that fair value gap that was inverted. Another is below the swing low. Okay. Now, there are risk management techniques that I make use once I make the entry. I, of course, make use of trading managers or simple trading managers as an EA, of course. And it allows me to enter two positions so that I can take partial profits and ride the rest of the position that remains open. So in the first position, okay, remember, just use either 1% or less than 1% per trade of your total account balance. Your first partial profit should be taken at 1:1, okay? So once you have reached 1:1, take 60% profit or take partial profits, and then leave 40% of the remaining position to run, okay? Now, where would it run? Okay, it could run all the way to these external range highs right here, thus giving you a total of 1:2.21 risk to reward ratio. Or you can just basically hold it until you see a reverse signal. Okay, in this case, there is a reverse signal here, and you can exit right here. But I would rather exit at the external high right there. Okay. In some cases, if I believe that the trend is very strong, I would just basically hold it since there is a long bias for these stock indices, okay? But if you think that the asset is ranging, then take profit at the external range high, okay? I hope that this simple video has helped you understand this strategy and you can make use of this on your stock indices, even commodities like gold or silver, or oil, and some forex pairs, of course, like euro dollar, Australian dollar, US, or pound dollar, or US dollar JPY. My preference would be these four stock indices, of course. Okay, thank you for watching.